Okay, this is gold priced in US dollars. Everything is on track in my opinion. The bull is alive and well. The bull is looking up, and I have absolutely no reason in the world to doubt the strength that I see in the precious metals. Even though we went down here this last week, we haven't really broken through important levels. The most important level, as I mentioned many times, is the 1300. We haven't come close to it. We have run down towards 1320. In the process, coming down from this spot, we have traced an ABC that appears to me to be a balancing corrective phase to what we have seen here. That's an ABC. This is an ABC common, this is an ABC zigzag, therefore you have alternation. Therefore, you could reasonably expect actually continuation of the rally in gold towards 1380 and maybe a lot higher. All the other charts that I have that are associated with gold, you will see them in a sec. Silver in euro, silver in US dollars, they show perfect triangle. And I have every reason to believe that we are in a fourth wave. Okay, so I'm putting my money on this one continuing higher. If you are not sure, you don't have a position, you are hesitant, again, don't do anything. My best advice to you is to wait for the rally to get underway, to instill, as it were, more confidence in that the structure is going to unfold exactly as I'm explaining here, and retesting 1360, yes, 1360, coming back towards 1370. There should be no doubt left. There should be no doubt left. It is gearing for a blast above 1380. It's going to run. It's going to run, and as you can see from the wave count that I have here on the daily, my assumption is that it's going to give us something like that. That's going to be a very nice move. Could be as much as $100, maybe more. $100 from current levels will take us to 1,440, 1,450, maybe more. But this is the overall idea for the next week or two. Now let's zoom in here on the 60 minutes. And that is the 60 minutes taken as a 1-2. Third wave ended here. Fourth wave, as I explained, could have ended here. So very short term, what you want to watch is right here. We don't want to see gold coming back doing this. Certainly not breaking 1,300. That's a no-no. It does that, forget about my 1, 2, 3, 4, that's dead. Absolutely dead in the water. Gold could be going down. Could go to 1,200. And what that would be, in my opinion, that will simply prolong the very big second wave that we thought ended here. I would not turn a bear, if you like. I would not turn a bear on gold. If it does go back to 1,200, I would think that this is a corrective phase here. We are not necessarily going to crash way lower. No, that's going to be completely out of step with so many markets that are showing us positive signals that the commodities are coming back, resources sector is coming back, mining sector is coming back. I just can't see the whole thing turning sharply lower. It just doesn't look likely to me. So as I explained, if we run back up here on the 60 minutes, we run back up to towards 1,360, 1,370, all is very well with the bull. Very well. Even if we end up getting stuck here for another few days, that is good news. That is good news. It is strengthening the launching pad that will send it way high. Okay, so it's totally up to you what you want to do with this information. It is a move. If this wave count is correct, it is a move that you could cash in very nicely. If you go, let's say, on an ETF, if you don't like to trade the futures, you can go for an ETF, double leverage ETF, long, yes, bull ETF on gold or silver. You could go for the options on those ETFs. There are plenty of things you can do with a move that is likely to be unleashed now, taking us a lot higher. Okay, here's gold priced in euro. You see, it's gold versus the euro, so it's basically the gold priced in euro, and that is the daily, and that's a perfect, absolutely perfect looking ABCDE. What can I say? This is looking perfect. Now, the only thing that is different in this chart from the previous chart you have just seen is that in the previous chart, in fact, what we were doing this. We were actually looking at this. I don't know if you spotted that, but that's basically what we had in the previous chart. But here, look, I'm introducing this. But quite frankly, yeah, you will have another one too here, that's for sure, yeah? That's another one too. But quite frankly, if I'm getting this right and this is a triangle, what does it matter? I mean, that basically tells you that the bullish trend is intact and we are heading higher. And over time, and I would say not a very long time, let's say 10 trading days, maybe less, we should be in a position to sort this out. We might be able to adopt, or we might have to adopt the same wave count that we just used in gold price in US dollars, this one, or we might have to use the one I just introduced. But that's no issue for someone who is long and who is looking to capitalize on the movement up. This is added information in due course that you can manage, but the important thing is to be on the right side of the market, and being long when you see such a thing appears to me the right thing to do. Okay, that appears to me a perfect fourth wave on the 60-minute scale of gold priced in euro. Silver in US dollars, that's the weekly, and silver is uncompromisingly bullish as far as I can see. No question. There's no doubt in my mind silver is gearing for further upside here. On the weekly, we have blasted above important overhead resistance here, and it didn't come down so far. It hasn't come down to test that level. So that's good news. That's very good news for the bulls. And we are battling the next overhead resistance right here. You see this mess right here. It is impacting the price action, and it is sitting just on top of the 200 moving average here. This is the weekly, so you don't often see that. I mean, you don't often see the 200 coming into interaction, if you like, on the weekly scale. And often you see the 50. Now the 50 is turning up. The 21 is hugging the price right on the bottom. You can see that here, here, here. The 21 is the dominant moving average here on the weekly. So I think everything is on track to continue higher. Why should I doubt it? It looks absolutely textbook stuff. So I'm just going along with it. And you're going to see slight complication here, which again shouldn't really deter you. If you're a bull, everything appears to be on track to go higher. That is 1-2. That's 1-2, no issue here. Now in the case of gold, if you remember, we took the 1-2 and we went up and we said this is a 3 on this scale, this blue scale. But here what I do, I actually present the 1, 2, 3, 4 what I had in the gold price in euro. Do you remember that? We had this variation, and here again we end up seeing a fantastic triangle that is the perfect pattern. It's exactly what you want to see after this surge. It's really perfect. It's just holding around 20, just above 20 around here most of the days. It held above 20. There is a lot of buying power that is keeping the price even away from double checking or retesting the breakout point. This is a normal price action. When the market breaks out in this way, you would normally expect it to come back and retest the breakout point. It hasn't done that, and that is, in my opinion, a sign of strength. That it doesn't need to do that. It's a sign of strength. It didn't even come to test my critical level from last week. Do you see that? And it appears to be inching slowly towards touching this level. I don't know if you can see that right here. Now you should be able to see that. You see this line? It's looking like it's coming back towards this line. Everything looks to me poised to send this commodity higher. Yes, I see a perfect ABCD here. Whether I'm going to treat this as a 1, 2, 1, 2, 3, 4, I'll worry about this later. I have two things to watch basically. I'm watching this line. I don't want to see it coming back, breaking under this line. That's a no-no. For the bulls, that's bad news, definitely bad news if it breaks under this line. It breaks above this line, everything is alive and well for the bulls. The bull is alive and kicking, is going to run and run. Once it runs above this level, I think we are already in the impulse wave, and we should see further upside. I don't think it's going to be a question of one day. It's going to be probably extending over several days. I would imagine that if this is the fourth wave on the scale of the second wave that you see here, so what you have to expect is something like that. You see, this one took about 2 weeks. So at the very least, you're talking about a week and a half of strong price action on the upside. So again, you might want to consider going, depends what is your preferred vehicle for trading. This is a perfect looking triangle. Basing action here. Okay, building the base, the launching pad for the next move. It's time to go long if you are not long. I wouldn't jump in with enormous position, because at the slightest fluctuation you're going to panic. Why do that? Well, it's going down there and you're going to completely panic, and it might be a fluke move and it might come back. You will regret. So don't put a huge position. Put a position that you can live with. You can give it a bit of room to run here, and eventually you'll have more staying power with a smaller position. You'll have more staying power to see silver reversing and running above 21. Now here's silver, silver against the euro. Okay, so silver price in euro, that's the daily. And look, this is the wave count that we had as an alternative also in gold price in euro. You remember that? So that is looking perfect structure to send silver higher above 19. And for now, I have absolutely no reason in the world to doubt the strength that I see here in silver right here. And I explained the long-term consequences of the jump that we have seen here. We are probably going to knock the door here on 22 long-term. That's the weekly. Knock the door at 22. We are probably going to go sideways here for a while. Okay, and later on go even higher. So in short, this is looking great.